to open in the positive territory today. Now, Sensex is up currently at about 0.26% at 65,413 levels, while Nifty is up about 0.39%. Now, the mid cap and the small cap space is also active. It's up about 0.6. Mid cap 100 is up about 0.69%, and the small cap index is up about 0.77%.
All right, that is of course the markets, but all of this on the back of corporate earnings largely positive as they were reported yesterday. Let's start with Airtel though, because Airtel did not report very good set of numbers. Sequentially, profit was down, revenue in fact was down about 46%. Year on year, no change.
So, Shweta, the results that came out yesterday were mostly positive. Airtel, although disappointed the streets, net profit fell on a sequential basis. It fell about 46%, but on a quarter-on-quarter basis, sorry, on a year-on-year basis, it was flat at about 0.34%. Now, this was largely due to the devaluation of the Nigerian currency, which also was the reason why the African business of Bharti Airtel posted loss. Now, although African business posted loss, it did surprise the street positively, and it exceeded the expectations of the analyst in terms of the margin and the EBITDA. Now, the revenue of the company was up about 14.1% at 37,440 crores versus 32,805 crores. Now, this was primarily driven by addition in the subscribers. Now, in the April and May period, the company added about 1.5 lakh subscribers. Also, one of the reasons why the revenue went up and also the margin went up by about 210 basis points was because the ARPU jumped by about 10% on a year-on-year basis to about 200 rupees. Now, this was primarily because if you remember, Airtel in the beginning of the year had gotten rid of its lower tariff plans, and the cheapest plan you can buy from Airtel was about 150 rupees. Now, that definitely helped Airtel post a solid set of numbers, at least as far as margin is concerned. So, 210 basis point, and even the street has reacted positively. Despite a miss, Bharti Airtel is up about 0.5% in the opening trade, and it's largely tracking the gains in the indices.
This ARPU debate is quite interesting, Shweta. Suyash, I feel, forever Airtel has been trying to increase ARPU, and this figure of 200 rupees average revenue per user touching 200 has come after 10 years. The last time that Airtel saw an ARPU of 200 rupees was in 2014. It's taken almost 9.5 years for ARPU to reach 200 again, and we are talking about a very different era of telecom prices of 2014. And data prices, telecom prices, call prices have only dropped sequentially year on year. Now, I think Airtel's long-term target is to take ARPU to about 300, and the reason that Sunil Bharti Mittal has given is that, if you primarily have only two solid dominant players in the market, one being Jio, the other being Airtel, on the backs of whom the entire Digital India movement is pretty much finding its feet, then these two units, and Airtel specifically, which is not as diversified as Reliance, will have to remain profitable and will have to continue growing. Let's look at, in fact, the market share of Jio and Airtel as well. Suyash referred to the fact that more subscribers got added. Let's look at the latest TRAI data and try and see what the market share of Airtel and Jio is. Last I remember that pie chart that we had made, that pie chart shows that about 32% of the market share is still owned by Airtel. Reliance Jio, on the other hand, is about 38% or so, whereas Vodafone has been consistently losing users, and the base plan also that you spoke about. I think the base plan that Airtel has now been able to increase from 99 rupees to 150 rupees is on the back of a 4G plan. So it seems like very, very categorically the company is doing away with slower data speeds and smaller packs to increase this ARPU. So ARPU reaching 200 at a time when Vodafone customers are jumping ship, joining either Airtel or Jio, and Airtel being able to increase entry-level rates when there is a behemoth called Reliance, which owns Jio in the market, yet to react to a price change. I think it shows a lot of resilience, it shows a lot of confidence on account of Airtel, and this would be something that the market is taking into account. And hence, none of these numbers can be seen in isolation.
Come to think of it, we talk about a 200 rupees ARPU, which was same as what it was 10 years ago. The market has substantially changed since then. There were a number of players in fray currently it's a duopoly, therefore making it easier for these companies, existing players, to shore up more revenues. How do you see the tariff war playing out? As customers, are we likely to see tariffs going up from here on, now that you only have two players?
So I think we'll have to wait to see how Reliance Jio reacts to Airtel's increase in prices. It hasn't reacted yet. What I see as the game being played between Reliance and Airtel is that Reliance now wants to go into the tier 3, tier 4 cities and wants to, with not the smartphones but the feature phones, try and capture a larger share of the tier 3, tier 4 cities. And over there, a price war on account of increase. So it seems that for smaller cities, Reliance Jio is going to continue keeping lower prices. But in the bigger cities where it goes head on with Airtel, or rather Airtel goes head on with Reliance Jio, even Jio could increase prices, because eventually the game will have to boil down to adding subscribers and each subscriber adding enough revenue on a month-on-month basis for both the market players to grow. Right now we tend to call it a duopoly because technically, you know, both combined have a market share of about 70% or so. Industry still doesn't want to recognize this as a duopoly. Industry still says that there is a Vodafone idea which is on a path to recovery, and the government has been able to infuse some capital to make to take over Vodafone's debt and convert that into equity. So the government is not going to let this become a duopolistic market. But every month Vodafone losing consumers, more subscribers adding to Airtel and Jio suggests quite clearly that we are moving into a duopoly market.
All right, we're moving
And
into
it's not just the India business that's doing well for Bharti Airtel. It's enterprises business, it's home business, it's you know, Africa business. All across the board we are seeing growth. Now it just Airtel Africa business, it not only exceeded the expectations of the street, but it also, like, they added 143 million new subscribers during the past quarter. So that's a big across the board growth coming in from Bharti Airtel.
Alright, so Bharti Airtel continues to spread its wings outside of India as well. Vodafone continues to lose customers. It's going to be a tight water for Vodafone, and they've got to really up their game if they want to sustain in this business. They're losing customers on a daily basis. But shifting to another story that we are tracking, and that is coming by the way of Sun Pharma, pharmaceutical business. Although Pharma Pack was up yesterday, Sun Pharma hasn't reported great numbers.
So Sun Pharma, Shweta, did disappoint the street with its set of numbers, and if you can pull up the numbers of Sun Pharma on the screen. So Sun Pharma posted a loss of about 1.9%, which was largely flat on a year-on-year basis. Meanwhile, revenue jumped about 11%, and EBITDA stood, was up 27.4% from 2,614.4 crore to 3,332 crore. Now, margin saw a 230 basis points jump from about 25.6% in the year-ago quarter to about 27.9% in this quarter. Now, pharma stocks had bucked the trend after, we were seeing across the board selling, and all sectoral indices were trading in the red. Pharma was the outlier. It was up about 1%, although Sun Pharma's earnings disappointed the streets, and as a result the stock took a beating yesterday, and even today the stock is down about marginally lower, down about 0.13%.
All right.
I'm reading different numbers here, so perhaps I'm not able to reconcile with what numbers I'm reading at the moment. Year on year, certain organizations are saying it's a 23% decline in net profit. I think we'll tally those numbers again. But what exactly is causing this loss, Suyash?
So Shweta, one of the biggest things that was, the decline in profits, the net profit, was on account of a one-time loss of about 323 crore. Now, if we add that back, I think that's where the discrepancy in the profit figures that different brokerages, because it's a one-time effect, right? Okay. So mostly if you take that out, an extraordinary income, the profit would have risen on a year-on-year basis. So I think that's where we are seeing the discrepancy. Although the company's US business has exceeded expectations. Now, US sales were about 471 million in the previous quarter, whereas the estimates were about 440 million. So a big beat on that front. Although the street doesn't seem like it's really, impressed with Sun Pharma's quarter.
All right, and we'll also quickly tell you how the stock is doing at the moment. But before that, let's move to MRF, a 5-fold jump in profit.
MRF posted a very good set of numbers, and if we can bring that up on the screen, please. So MRF, Shweta, 417% year-on-year jump in net profit from about 112.4 crore to 581.5 crore. Now that's a big beat. Even revenue, if you see, was up about 13% from 5,598.9 crore to 6,323.3 crore. EBITDA, on the other hand, was up 132.9% at 1,114.2 crores versus 478. Now see the margin. Margin went up by 910 basis points. So all in all, a great set of numbers.
How do you explain this, Yash? That revenue is up only 13%, but profit is up 400%. How do we explain this? Is this, again, I mean, input cost we had seen had been high, input cost got reduced subsequently during the year, but that reduction in input cost not getting passed on to consumers and hence companies making supernormal profits, is that the case or there's something else?
Reading between the lines, I think that appears to be the case as for now, because again, as you said, 417% jump is huge compared to just a 13% rise in revenue. So I think the input cost, which has come down over the last few months or so, has not been really passed on to the customers, and MRF is really making a bank on it.
And MRF, I think, was one of the few companies that, I think the only company that had broken into the record of the stock trading at over 1 lakh rupees, right? It had never demerged, it had never done a share split, and is a company that has traded above the 1 lakh rupee per share mark. Now, I think interestingly, the whole tire industry and the rubber industry is agnostic of petrol vehicles, diesel vehicles, electric vehicles, two-wheelers, four-wheelers,
whichever you buy.
And there's no innovation.
Tires
have been same
tires
since
are
the beginning.
I mean, you'll have radials, you'll have a different cut, you'll have a different design, but tires are tires, and tires go into anything that moves on roads, from cycles to cycle rickshaws to auto rickshaws to two-wheelers to three-wheelers, four-wheelers, buses, trucks. And all of these, incidentally, have been seeing a rise. We've sold more than 2 million cars in the first 6 months of this calendar year already. We are adding more electric vehicles. We are adding SUVs. SUVs come with bigger tires, more rubber, more expensive tires to buy. So overall, I think one industry which does not seem to get impacted whatsoever with any change in technology, with any innovation on the engine side, whether it is ICE or electric, with any complication around localization with respect to batteries or other components getting imported from any part of the world, is the tire industry. And the tire industry, I think, is a great business to be in and to have been in consistently.
Definitely for the investors. Now, MRF stock was up about 4% yesterday. Today, it's up about 1.5%. Year to date, Shweta, 23% rise compared to Nifty 7 to 8% rise. So, great news for MRF investors.
All right, great news for MRF investors. In fact, the current stock price clearly over 1 lakh rupees, 1,07,989 rupees. You've got to have at least 1,07,000 rupees to buy one stock of MRF. That's brilliant. And as far as Sun Pharma is concerned, I'm looking at the stock performance. Stock is down almost 0.31%.
Yes.
So, I mean, I think investors are still not sure of how to read the numbers there, but of course a flattish opening there for Sun Pharma.
That's why we are here to provide that clarification.
Absolutely, flattish sort of opening for Sun Pharma at the moment. Also, let's quickly jump to Dabur before we go to Zomato, which has sprung a surprise.
So, Shweta, Dabur's results were in line with the street's expectation. Although the stock took a hit yesterday and it was down about 1.8%, but the investors quickly realized their mistakes, and now the stock is trading up about 2.65%. Now the revenue growth of 11% was driven by a strong double-digit growth of its home and personal care and healthcare business. The Q1 revenue jump of these two segments alone was about 14%. Profit figure was up about 3.5% on a year-on-year basis, whereas margin was flat at 19.3%. So that could be a big concern for the company going forward. Also, the company missed the street's expectation in terms of volume growth. Now, the street was expecting about a 5 to 6% volume growth coming in from Dabur. It was about 3%. And consolidated EBITDA, as you can see, stood about 604 crore from about 543.7 crore in the year ago period, and 11.2% jump.
So again, now this time what we see is that the revenue has increased much higher than the profitability. Can we attribute this again to food inflation? Dabur being a company that sources its food and processes food. So food inflation has been a critical area of concern for India, for the rest of the world as well. So in this case, unlike MRF, can we hypothesize that Dabur has imported or has procured food and food-based products and commodities at a higher price without increasing the MRP?
That's definitely the case, Karthik. Also, because the volume and the demand has not recovered, they were not able to offset that higher input cost, and that's why we have seen just a marginal increase in profitability. But overall, it's better than the street expectations. It's better than the results posted by its peers. And so Dabur, that's why Dabur stock is up about 2%.
All right. What does it tell you about consumption in India? FMCG business, of course, an indicator of how tier 2, tier 3 city and of course metropolitan cities are also consuming these fast moving products. What do these numbers tell you about consumption story?
So Shweta, I think Dabur, I would still attribute most of Dabur's produce to an urban India phenomena. I don't think Dabur products would reflect the health of consumption in rural India. It falls into the food processing category, but is still not essential. So you can't compare, let's say, the rise of Dabur with the likes of, let's say, other packaged food brands like
ITC
Amul or ITC or Nestle, etc., which make, let's say, which have milk and milk-based products. Or ITC, which is into wheat and rice, which of course is absolutely essential.
Staple.
Or Tata salts, Tata products. So Dabur, while there is a 10%, 11% growth in revenue, I think it comes primarily on the back of urban India consumption, and urban India consumption has not taken as much of a beating as consumption in rural India. And these not being absolutely classified as essential food products will not really tell a complete picture of the consumption story.
All right. Let's move on. Zomato has posted profit for the very first time this quarter. Quickly run us through numbers before we understand what is happening here.
So, Shweta, Zomato has posted a profit of about 2 crore against a loss of 186 crore and about a loss in first quarter of FY23 and about 190 crore in the previous quarter of this of the FY23. Revenue on the other hand was up 71%. Now Zomato saw a great increase in its subscriber base, at least as far as new Zomato Gold plan goes. So that has a gross order value of a 30% year-on-year rise that has helped revenue substantially. Also, its food delivery business has shown substantial growth in the last quarter or so. Now, margin although was up marginally at about 9 basis points. Now, I want to touch upon this 2 crore profit figure, which is mostly a product of accounting treatment. Now, one of the things that we need to understand is that for the purpose of calculation of tax, IFRS or the accounting standard that you follow computes it differently, and the income tax computes it differently. So, Zomato had a deferred tax asset. Now, the difference between the two creates an asset or a liability. Now, if it's an asset, it's called a deferred tax asset. Now, Zomato was sitting on a deferred tax asset of about 17 crore rupees. Now, loss before tax was about 15 crore rupees. So that has helped. The addition of deferred tax has helped Zomato turn profitable for the very first time.
All right, so to understand it simply, it's just a profit in the books.
Is that so? Is it just profit in the books?
That's what I'm reading, at least from the experts coming in, because the loss before tax figures that stand as of now are 15 crore, a loss of 15 crore, and the deferred tax was added of about 17 crore, which gives us a figure of about.
But we are also seeing the revenue doubling in this case, Yash. The revenue has not doubling, but up about 70%, like you've mentioned in the graph as well. So 70% increase in revenue and against a loss of 186 crore rupees in the last financial year, and that would have been, to my mind, year one-off listing, right?
Yes.
Zomato listed around April, May 2022. So the 186 crore rupee loss would have been after the first year of listing, ever since data became public. And between last year and this year, the revenue jumping about 70% would have had some sort of an impact to offset the losses on actuals as well, not just on the books. And add to this, I think even the quick commerce segment, the Blinkit, which got growth 130% growth in Blinkit. So quick commerce, I think, is something which would be adding some sort of profitability, because unlike food, this is a business that sells on MRP. It doesn't have any deep discounting. It doesn't have too many offers and coupons which platforms take on their books as hits or as losses or as blows. So the quick commerce business model is pretty much a standard delivery fee for every order that you place, and that would not be, in my mind, as expensive as the cost of, let's say, an employee or a rider making those deliveries, X number of deliveries every day, on the basis of which he is paid. And the fuel cost and other sort of additions to making that delivery happen. So I think the flat fee model is something that would have seen this growth in revenue for Blinkit, and that would have also added in some measure to Zomato's profitability, in addition to what has been done by way of deferred assets versus liabilities.
All right, so good news there, all in all, for Zomato. And Zomato stock up about 10%?
So the guidance also coming in from the management is that over the next few quarters, the company is expected to report profits, and the revenue, on the other hand, at least for the next couple of years, is expected to rise 40% year on year. So the commentary has, and as well as it posting profits for the very first time, has helped Zomato post. Zomato investors, make 11%. The stock was up about 11% in today's morning trade. The stock has been highly volatile. Let me just quickly check the prices again.
And while you do that, I think it's good to compare Zomato with its closest competitor, Swiggy. So Swiggy has also turned profitable on the quick commerce business, and it's on the food business, and its quick commerce business is also touching profitability around now. It's an unlisted company, so we really don't know. We haven't been able to look at the financial reporting, which is not mandated, and hence it doesn't come out in public domain. But its food delivery business and its quick commerce business are both profitable today, and this happens at a time when there is a government-supported ONDC, Open Network for Digital Commerce, which is trying to play the same game of deep discounting and the same game of coupons which are valid for the first few times that you as a user come onto the platform. But ONDC, despite being able to add a substantial customer base on a week-on-week, month-on-month basis, does not seem to have impacted the business of Zomato and Swiggy just yet.
All right, and Zomato stock, as we were looking at, is
up 11%.
11% almost. So
it touched an intraday high of about 98.4, which is about a 14% up. So on an intraday basis, it went as much as 14% higher, and an intraday low of about 88.4, I think, which was the opening price as well.
All right, so investors are picking that news very, very positively. Well, hope continues that Zomato will deliver on profits and will live up to its guidance, of course, in future. But we're going to move on. So Yash, thanks very much for joining with your inputs. We will keep coming back to you for all things corporate earnings and markets as of this afternoon. Thank you very much. Shifting focus to another interesting story that we continue to track since yesterday, when data protection bill was tabled in Lok Sabha. Let's quickly cut into that important bite that came in from Ashwini Vaishnaw, the IT minister, when he was tabling the bill in the parliament, before we jump to it.
Or should we just jump to the do's and don'ts first, right? I think we can try and pull in that that soundbite. In fact, that excerpt from the Lok Sabha later. But let's understand what is this data protection bill really and what it is all about. So let's start with the key players, right? This is something that we touched upon yesterday, around the same time that Minister Ashwini Vaishnaw was presenting the Digital Personal Data Protection Bill, DPDP 2023 in Parliament, in Lok Sabha specifically. Now, what is this data protection bill all about? It's got three major players, really, Shweta. One, of course, are the data principals. Who are the data principals? These are individuals, digital Nagrik, citizens of the country that leave a digital footprint anywhere that they make a transaction or input any data on any website. So that's a digital footprint. Everybody who's logged on to the internet, created something as trivial as even an email ID, or let's say has created a WhatsApp account with the phone number, email ID punched in, has left a digital footprint. So these are the data principles. Then there are the data fiduciaries, exactly the same companies. Let's say, an email service provider, or let's say any other telecom service provider, e-commerce platform, even an offline retail shop where you swipe your credit card, or you check into a hotel where you show your PAN card or your driving license and a copy of that is kept, or something as simple as booking an airline for which you may have to even show your Aadhaar card. Now, all of these agencies or companies that collect the data are called the data fiduciaries. And then the third player, a very important player in this case, and let's move on to the third player, is the Data Protection Board. This is a government appointed body, a regulator of sorts that ensures that the data that the data fiduciaries are collecting is protected and is not sort of, breached or not shared with a third party. Now, what is this DPDP Digital Personal Data Protection Bill all about? Some very, very critical elements to consider here. Number one, there is now going to be a fine of up to 250 crore rupees if data is transferred from one data fiduciary to any other third party user without a formal written consent of the data principal. That means you and I will now have to explicitly say that we are okay with our data being transferred. What part of our data, how much of it, being transferred to which entity, for what purpose. So it's what I have complete control over my data as per this bill now, and without my explicit consent, this data is not going to be shared with any third party except, and there are exceptions, except in the case of, let's say, a medical emergency, except in the case of the government requiring, so national security, and the government requiring this data for any benefit to accrue to you or any investigation that the government may want to run on you. So the government is completely isolated from this data protection. Government has complete access to your data no matter what, and government decides where this data is housed and how this data gets used for any purposes of national security or usage by the government. The data bill does not prohibit this data being exported out of the country, which means if you give your written consent, this data can be shared even internationally. There is no restriction on that, unless, again, there is a compromise on national security. So the government will be able to decide that these are a list of countries that we find potentially dangerous, where your data could be misused, and as the government of India, we decide which countries your data cannot be sent to. So that becomes an important part here. Now, this whole 250 crore rupee penalty, now while this penalty can go anywhere between, let's say, 10 crore rupees to 250 crores, 250 being the upper limit, the new data bill actually, prevents jail time. So there is a compounding of penalties, but there is no jail time for data fiduciaries. Good, bad, I don't know. I think that is something which is open for debate.
Which is one of the concerns. There are a lot of concerns.
Absolutely.
And let me, and I want to understand, would it be then right to say, Karthik, at this point, that all your pesky calls from telemarketing agencies to your data being shared with, parties that you've never interacted, all of that could be stopped at source with this?
So, Shweta, I think wherever your data is right now, whoever owns your data, as part of the new data protection bill, anybody who owns your data today, as of this day, or once the bill gets passed, honestly not today, will have to explicitly seek your permission to use that data, to use that data for their own purposes, to use that data to transfer to any third party. And as a consumer, as a data principal today, you have the right, not today, again, matter of figure of speech, once this bill becomes law, you will have the right to get your data deleted or erased from the servers of whoever owns your data. So yes, pesky calls could finally come to an end if you decide not to share your data, or if you decide what purpose your data gets used for. And pesky calls, I think, should soon become history. But then there are other concerns as well. Other concerns are that the government appoints the Data Protection Board. So
I want to come to your concerns and the concerns that have been raised by other people who've been closely watching out this bill, including the opposition. Let's quickly play up that bite of IT Minister Ashwini Vaishnaw first.
Honorable Chairman Sir, I rise to move for leave to introduce a bill to provide for the processing of digital personal data in a manner that recognizes both the right of individuals to protect their personal data and the need to process such personal data for lawful purposes and for matters connected therewith or incidental thereto.
All right, so bill has been tabled in Lok Sabha.
it got tabled in the Lok Sabha yesterday.
It will be discussed. There will be a debate, and key concerns that the opposition has and some of the analysts, people who are active in the domain of data protection have, is that this data could be utilized by the government as and when it wants. In fact, Rajiv Chandrasekhar, so as to allay some of these fears, went on record to say, no, we're not using your data. We'll only use it when national security demands. Now, national security is a very vague term, and we know what's happened in the name of national security in the past, which is where the crucial IT Act also comes into the picture. The 69 provision of the IT Act, which is that government hold of your data it deems fit. It's a question of national security. All of that debate is once again brought to fore through this bill, among other concerns, of course.
You're right, Shweta. I think there are concerns with regard to how much data and for what purpose will that data be used by the government. Those are valid concerns. There's no doubt that, it is worthy of debate. But my whole defense on this is that at least there is a bill on the table today. At least there is some movement in your data getting protected, at least against some misuse by some third party. So while there are these concerns, and these concerns of course are going to be raised by opposition, should be raised by advocates of data privacy and should be debated, I think the time has now come for this data bill in some form to become a law.
Okay.
So at least whatever breaches we are seeing today, whatever transfer of data to third parties we are all sort of succumbing to today, needs to be put an end to. And that can happen only if this bill becomes a law in this form or any further amendment. I mean, it's gone through multiple amendments already. It's been in discussion for about 4 years now. It's been 4 years in the making. It is time that in some shape, some form, this bill does become a law, and there is at least some protection of data that gets introduced in the way data is used. Now, parallelly, it also becomes a pain point for big tech. Big tech runs its business on account of the amount of data and the analytics that run on that data, where they are able to profile even through cookies, even through without your direct consent, even by understanding what sites you have browsed and what items you have looked at. There are suggestions across multiple other platforms for you to buy the same goods. So I think there has been enough misuse of data, enough power vested in the hands of few big tech companies that sit on top of this data as kings and queens and are able to use this data in any form they deem fit.
Okay.
So at least, restricting some power of the big tech, preventing misuse of data, data breaches, data leakage, and all of this not going into the wrong hands or into hands of people you don't want, right or wrong hands you don't want your data shared with. So at some level, I think all of this should come to an end with this bill becoming law. This particular bill or any further amendment to this bill, if data protection becomes a law, and the Supreme Court has also said in its 2017 verdict that right to privacy is now a fundamental right. And despite that, 6 years on, we don't know where our data is. We don't know who accesses our data and what our data gets used for. As a result, there are frauds, there are pesky calls, there are unwanted emails, there is spamming, and God knows who's sitting in which part of the world has what data that you have access, you have provided to somebody else in some other context.
Right. So, of course, data protection bill there. The fine prints, as you heard, we explained, this bill, we don't know whether it's going to be discussed today but it has been tabled in
It
Parliament.
has to be debated. It has been tabled. It has to be debated, whether that happens today, tomorrow. But it should be debated in this session itself, and hopefully both the houses should pass this and it should become a law.
All right, will become a law perhaps by the end of monsoon session of the Parliament. We'll bring you more details, but moving on. We are now looking at import restrictions for laptops, palm tops, every other computers. Government essentially is saying you cannot import these items anymore. You'll have to make them in India. Obviously, the thrust here is to promote Make in India, but how viable are these restrictions?
Shweta, you know, I can't help but refer back to the data protection bill, because one of the reasons that the government has cited is that, so what has the government said? Let's cut to the brass tacks. The government is saying that you will now need a license to import electronics like PCs, laptops, tablets, servers. There's a list of about 20 such items only from trusted partners. Which are these trusted partners? Read between the lines. China is not one of them, right? No surprises there. China is not going to be a trusted partner. Okay. So the government is saying that you will need a license to import, laptops, PCs, electronics only from trusted partners, and you need a license to do that. Now, in addition to that, the government is saying that there are certain exemptions. The exemption is you are traveling from abroad for personal use. You buy one laptop, you buy one tablet, you can carry it. These form under the baggage rules, right? So as baggage rules for personal use, you can still buy abroad, you can bring it. For personal use, you can still order from an online website, let's say an Amazon.com rather than an Amazon.in, and it arrives as a parcel, as a courier, and you pay whatever import duties are valid, and you can still use it. Now, in the case of, let's say, R&D, or let's say understanding, deconstructing a particular piece of technology, industry can import up to 20 pieces, not for resale, not for end use, but only for R&D purposes. And the government has very clearly stated that once you import 20 items, these 20 items can only be used for R&D purposes, after which they either need to be re-exported or they need to be destroyed. So it cannot be used for end purposes. Now, what does this really mean in the short term? In the short term, what this really means is that prices of laptops, tablets are going to go up.
Okay.
It's going to be very difficult to immediately apply for licenses and get new vendors from trusted partners in a bid to sort of, get the supply immediately started. Now, let's look at some data and let's look at some numbers here, and that's what I want to move on to. Now, what's the total import size when we talk about goods like laptops, PCs, tablets, servers? These items constitute a total pie amounting to about $8.8 billion. Now, look at this graph. 58% of that, of $5.1 billion
coming from China,
comes straight from China. So it's a double whammy. You spoke about PLI and incentivizing Make in India. Yes, there is PLI for electronics. I think the smartphone industry has used it very well. And this number, actually, our smartphone exports are much higher than this number. Our smartphone exports in the last fiscal were about $11 billion compared to total imports across these multiple 7 such categories we've displayed 4 is about 8.8 billion. 58% of that coming from China. Let's move on specifically, to laptops and tablets. If we can have the graph for laptops and tablets on the screen, you'll see that this figure for laptops and tablets comes to about 76%. 76% of laptops and tablets out of the total pie is imported from China. There's a similar figure of about 63% for PCs. 63% of personal computers get imported from China. So it's very clear that at one end, government wants to put a thrust on industry using the PLI scheme to set up shop in India, make in India, to sell in India or to export out of India. At the same time, the government is talking about hitting China where it hurts the most. It's an economic power which has been built on the back of electronics. Let's hit China and ensure that China's multi-billion dollar exports to India get restricted immediately with effect from right now, right? So China gets hit. That's the second advantage. And linking it back to protection of data or digital privacy, government has said that in the interest of national security, we want to ensure that these trusted partners are actually going to be countries which are not going to misuse any data that you are putting onto your personal devices. So I think it sort of blends in all these three facets of Make in India, of hitting China in terms of not importing from China, and further augmenting the digital privacy.
All right. So essentially, twofold impact here. Firstly, it hurts China. It gives an impetus to Make in India, and secondly, it also ensures data privacy. We have so far consistently made it clear through various actions, the government of India, that we want to depend less on China. And electronics is a sector that's been growing, in fact, one of the fastest growing export sector for India. And with this, are we also looking at perhaps cutting down on imports in the near future, Karthik?
That's the whole idea, Shweta. I mean, you said it yourself that we want to give a thrust to Make in India electronics. We are seeing the kind of investments that the world wants to make in India, from Micron to Foxconn to Wistron to even Indian domestic companies like Vedanta, semiconductors.
But it's going to be a long drawn process. So what happens to consumers? And you quickly alluded to how prices are going to go up.
Of course, the immediate impact, I see prices going up because there is going to be a supply chain problem. There is going to be an issue with importing bulk orders of laptops, tablets, PCs. Companies like Lenovo, companies like HP, Asus, all of these are going to find it very difficult to continue operating in India without making in India. So I think everybody would have gone to their drawing boards yesterday once this decision came out, and would have revisited their doing business in India strategy. And we should be seeing many of these companies which presently sell in India but don't make in India announcing their plans to set up a factory in India, because for any company.
But that's going to be a long drawn process.
My concern
is in a post-COVID world where a laptop has become an essential for a school-going person, a young child, in this case scenario, when the prices go up, it directly hits consumers.
No, I think the government has also said very clearly that licenses will be granted at fast speed. So, it's not going to be license Raj as we knew in the 1980s and early 90s up till 1991. Licenses are going to be granted, and I think companies who want to sell in India will have to widen their supplier base outside of China, as I see it. I have a feeling Taiwan and Japan and US are going to be immediate takers when it comes to the expanded supplier base of companies that want to sell in India, and Chinese companies that want to sell in India and other countries that want to sell their companies who want to sell in India will have to quickly draw plans and make announcements of setting up manufacturing bases in India, which gives a good fillip to the PLI offtake, which gives a good fillip to overall economic growth. So I don't see anything wrong in what the government is trying to do, because while it is going to take some time, eventually it becomes a great thrust area for capital investments coming into India in a sector which is a high growth sector of electronics.
All right, so let's quickly also move on. This is an important story we continue to track, but another story that we're tracking is coming by the way of electric vehicles. Temasek, the Singapore investor firm, is looking to invest in Mahindra. The joint venture will become most valued EV subsidy in India.
I don't think it'll be the most valued just yet. I think over time, if it grows, it could compete with Tata. Right now, you have three big players in the EV four-wheeler space as we know it, Indian companies in the four-wheeler space. Number one being Tata being the largest in terms of market share as well as market valuation. So Tata's electric vehicles, I beg your pardon, are of course the leading sort of EV brand, and we saw in the SIAM data that got released 2-3 days back also that it's seen a massive 50% or so jump in EV sales. The second right now with this investment happens to be Mahindra. Mahindra in the last calendar year, CY23, sold just about 6,000 odd electric vehicles. It hopes to sell about 24,000. Which are these? So I think one of these vehicles is the TU, not the XUV 400 recrafted as electric. I'm forgetting the name of that vehicle. I think it's 4EQ or something it's called, right?
So XUV 400 electric there. But the numbers are substantially lower as compared to other players in the electric vehicle category.
6,000 sold last year. This year it hopes to sell about 24,000 vehicles. Now, the Temasek investment that has been made for 1,200,000 rupees, 1,200 crores is incidentally going to give Temasek almost 1.5 to 3% stake in Mahindra's electric vehicle company, MEAL as it is called. And hopefully, that props up. Now, the third player in the market, of course, is Ola Electric. Ola Electric has its own plans to come up with its own four-wheeler electric vehicle next year. So, investment coming in Mahindra and Mahindra for the electric mobility journey to kickstart for the company.
An EV story for India there, really heating up with Mahindra, of course, looking forward with this investment to bring in perhaps more Mahindra electric cars in fray. All of that will eventually be realized when the money comes in, but grand plans there Mahindra and Mahindra has for EV sector, electric vehicle sector, that continues to heat up the story here in India. Karthik, thanks very much for all those inputs. With that, it's a wrap on this bulletin. Thanks for watching.
Pakistan is actually genociding Baloch people. So being Baloch is a crime. If you are a Baloch, it means in the eyes of Pakistan, you don't have any right to live.
The Chinese and Pakistanis are colonizing the Baloch and exploiting their resources.
The Baloch armed struggle will continue unless China withdraws, Pakistan military withdraws from Balochistan and give Baloch complete authority to decide for themselves.
The Baloch feel that if they don't act now, they will become marginalized.
What lies ahead for Balochistan?
Balochistan, Bangladesh 2.0, streaming now.
He thought he could outlast us. And 1 year later, the evidence is right here in this room.
Who will blink first?
So far from preventing the expansion of NATO, Russian actions have actually resulted in the expansion of NATO.
It's a mess for Russia and it's a mess for the Western world, for NATO and the United States.
Putin is a dictator, and if he loses, that means the end of his regime, and probably of him personally. So he has to keep going.
Year 2, no end in sight. Streaming now.
Gautam Adani, one of the richest men in the world, or a business honcho, accused of manipulating the market.
अदानी जी 609 नंबर से दूसरे नंबर तक कैसे पहुंचे? सिर्फ एक सवाल पूछा, नरेंद्र मोदी जी, आपका अदानी जी से रिश्ता क्या है?
He has given the space, the railways, the airport, which he has no experience also. So the country's interest has been compromised.
Government has been very clearly supporting few industrial groups, including Adani's industrial group.
Target Adani, streaming now.
We have promised that we will decarbonize our economy.
India will be leading this whole green hydrogen race.
I still believe that Indian road transportation, commercial, which governs your entire consumer price, can be run cheaper on green hydrogen versus fossil fuel as on date.
Green hydrogen is it's going to be a very major game changer. And in India, the kind of concerted effort that is being made to promote green hydrogen, you will see results very soon.
क्लाइमेट के क्षेत्र में क्वांटम जंप देने वाला है, वो है ग्रीन हाइड्रोजन का क्षेत्र। नेशनल हाइड्रोजन मिशन की घोषणा कर रहा हूं।
Hydrogen is a very energy dense fuel. It is also very light. It is a very green fuel for the simple reason the end product is water. It can be a game changer as India and the world try to mitigate the effects of climate change and global warming. There are many shades and flavors of hydrogen. If hydrogen is produced using renewable energy, then it is called green hydrogen.
Green hydrogen will help cut transportation costs, fuel, and consumer goods prices.
One of the first things that you can affect with green hydrogen in India is your commercial transportation. I am of the opinion, and given the global disruptions of supply chains, etc., I still believe that Indian road transportation, commercial, which governs your entire consumer price, can be run cheaper on green hydrogen versus fossil fuel as on date.
Even you could say even aviation is another area, and international marine transport is another area.
Green hydrogen will also help cut fuel costs for your car.
That is an advancement in the vehicle technology, fuel cell based electric propulsion. Indian Oil is also working on this aspect of the hydrogen economy, closely with automobile sector.
First steps of a hydrogen economy for India have been set. There is a policy in place, but it's still going to take some time for the vehicles and the whole ecosystem around hydrogen to be developed. If all goes well, in the coming decade, we may see more hydrogen-powered vehicles on the road.
For overall pan-India scaling up, cost of green hydrogen will need to decrease. And we will also need sufficient number of charging stations.
Today, the cost of hydrogen is much higher. It's maybe green hydrogen is $6-7 per kilogram of hydrogen. But many people assume Reliance, for example, as a target of bringing down the cost to less than $1 per kilogram in 10 years, in a decade. But there are still some other sectors which we call hard to abate sectors, where reducing emissions from these sectors is very difficult. And these are, for example, steel. Steel uses up among 50-60 million tons of coking coal, out of which large part is imported by India. And it is possible to replace this coking coal through hydrogen by slightly changing the technology.
What you have to see is that these are new technologies like electric vehicle. But as you know that it is growing very fast, and now the charging stations are available almost like 3 times what it was available 1 year back or 2 years back. But look at the complete life cycle thing. So once you analyze that, then you will realize that the initial cost is really not that high. But something which is completely ignored, and I thought we should point out, is the health cost of the pollution.